Good morning and welcome to the early bird. It's raining here on the old tin roof on the old country house, so to put up with that noise there for a while. Okay, Friday, always a great day, and also a new moon as well. So new moons are always a good time to start new projects. And they're also turning points in the market, but I don't really see any there as such. But there is support on the 4,000 on our local market, and also on the FTSE as well at 5,000. So we'll see how the price sinks into those numbers there. But last night in the US was closed, so volumes around the world were light on, and trading ranges in markets that were open were also kept intact as well within their ranges. Now, I wanted to point out here on the sort of Elliott wave count for the Dow Jones here on a daily chart, just so you know what we're the bigger picture and what we're sort of looking at here. And this October rally here, which is normally the bear market in October, and that's why we're not really expecting a Christmas run. But yeah, the internals here are suggesting further downside here, and this would be the wave count that we're looking at through here. So we're in wave 2 up here, and we're going into wave 3 down here. Now, this is an intermediate wave 2 here. And from the intermediate wave 2 to the intermediate wave 3, there'll be 5 waves of minor degree. And the minor degree is this one here. So that's down for 1 and back for 2. Yeah. And then there will be 5 waves down for minor wave 3, then 4, then 5. So that would be, once these 3, 4 and 5 finish there, that will be intermediate wave 3 complete. This is 2 but down to 3. So you can see the scale of the situation that we're in here. And where we are now in the picture is that we're coming down for minor wave 1 here. Even if I was wrong, and this minor wave 1 here was actually this one here, minor wave 1 down to here, we would still have a large bearish picture to the downside. So it doesn't matter, but I think we're on the right track here. But where we are now is in this wave 1 coming down through here. There will be 5 waves in that section through here. So that would be of minute degree here. So we've got wave 1, wave 2, and we're looking for 5 internal waves within wave 3 here to this one, then wave 4, and then wave 5 to make up this one. So we're in minute degree wave 3 here, which is this one here. So we're down for 1, back for 2, down for 3, 4 and 5. So we've got that fractal in there as well. So we've got 5 waves in there. We've been counting 5 waves in through here, and I think we're just about done and dusted here. Because it's closed on its lows, it's likely to open on its lows. And normally with Thanksgiving, over some long historical thing going back to 1956 or something weird like that, I heard on telly the other day that coming into Thanksgiving Day, this is normally a bullish sign here, and when it comes back it's also bullish as well. But as I mentioned yesterday, the durable goods figures in the US are not looking good. So we're not expecting sort of any run there. So that's the structure there. Now, also what we need to sort of point out as well, on our local market, we've been having robo trades there, and also on the US markets as well. And, you know, over the last sort of week, we've had this nice run down here. So we've cleaned up quite nicely on the robo trading. But once we come into this little area here, it's going to be a little bit tricky. Okay, so we need to be a bit more savvy. So any new robo trades that you put out, try and consider taking taking, because most robo trades, when about 90% or more or whatever, when they're triggered, they're triggering straight into profit, really, aren't they? So if you think about that, then if you take a percentage profit, at 11 o'clock, 11:30, sort of at the latest. If you take some profit at that stage, enough to get the trade to break even, then you're going to have a much higher success rate. So you need to plan for that as well. So you might want to put a bit of extra position on the market there, because if you're going to take out like 30% or 50% or something like that, then to have that little bit extra there to cover that. So to get the trades through to break even on the first breakout through this section here is what we're looking at here. The really good trading next lot will be coming from this structure coming down through here, and even more so this third wave coming down through here. This will be the real good. This will be the real fast one here. So that's where we can start to look at trading indices. Now, please don't take all these particular highs and lows here with too much accuracy. This is just a general picture, because this might this might extend down to here further, and the rallies may be shorter through here. So it may be further down. So the important thing to take from here is just to get the idea of where we are within this particular structure and what we'll be looking at. So we'll need to adjust things. But what we sort of do know also as well, we're talking about the sort of these old lows here. So we're talking sort of 11, that's the 11,000 there, and also the 10,800. So we kind of got support in this area here. That was one of the main things that we're looking at through here. And this would show up on our local market at 4,000. Everybody would be, that's the psychological number there. But we know when dealing with numbers or levels like that, it's not so much the 4,000 that interests us. It's the smaller levels surrounding the 4,000. So if we just bring that up for a moment and have a look at that, we've got time, because there hasn't really been much happening in the other markets. So if we look at this is the ASX 200 here. So the medium level is important here for sure, but really it's the 3,800. So people are going to accept that the market's going to come down to through here, and the price will play around through here, and it will be a negative situation through here. But I have to point out that once the market comes under the first minor level here and gets locked under here, if that's going to be the case, then that's really going to cause a lot of fear in the Australian market at that point. So I'm pointing that out because you need to sort of prepare for it, because you still need to do your own trading, and you need to know where we are within all of that. So we're kind of looking at the same sort of 5-wave structure to the downside. So once we get down there, the fear will come in, and that would probably be the time to catch that rally back up into there, retest into there, and then failing from that point. So just sort of understanding the bigger picture and what you'll be seeing in the newspapers and all those sorts of things. And it's kind of interesting to see to understand the structure here and in the US and so forth, and then see the news come along and fit the scene there. So and it makes it a bit more sort of comforting that you're sort of on the right track. So, but anyway, the 4,000 is obviously going to create some psychological things there, as it's done over here, and it'll do the same. So it's tricky. It'd be tricky trading around these sorts of levels here. Some of the other markets, of course, the commodities and as such, we've been looking at them. But if we just have a look here for a moment at the LME copper at the moment, this is it through here. We're just staying in this structure here. You can see here that we've got a clear wave 1 down, a wave 2, and then wave 3 coming down here, wave 4, and wave 5 will be coming down through here. So you know that the medium level here would be at 6,500 there. That's on the English market there. But we also know that on our local market, or the US market, for copper, we've got that at 300 there. So we're looking at that kind of support there. So this here is a little bit sort of like our market, really. And when we start looking at our market is, don't worry about that chart, looking at the XMJ, our material sector, because that's driving, you can see that that's got the kind of the same thing happening here as well. So we can expect those lows to be taken out, and of course the constituents within this sector will be there as well. Yesterday we've seen some volume come into this market here, so we've got that small range there and volume support there, and that's okay because that is close to the lows here anyway, and so is the ASX 200 and so forth, and that's at that minor level there, 10,800. So but you just expect that at the low there. So there is support there. We just need to see what volume comes in and continues with that there. So okay, so that's kind of it really. This is the back to the Dow Jones again on the 2-hour chart, and where we're sort of looking at now. So we're looking for support in this range down through here. To play out through this 10.8 to the 11 here. So we'll see that slow down, but the trend is still, the main trend is still down. That's the thing. We don't know how high these rallies are going to go. So we'll see how we go there. When we're looking at the I'll just put up the German market here. This is the daily chart for the DAX, and you can see that, well, we're following this A, B, C correction through here, and now we're seeing this unfold through here, and we're looking at this 61.8 level here, well, in price anyway, 6,180 as the turn for this one here. It's held under that, so we've held the bias of being short from that point as well. But once again, this is down, coming into the 5,000 again, so there will be support there, but we'll follow that that wave structure down through there, and you can see that we've got that, whichever way you look at it, we've got down for 1 and back for 2. So the third wave is unfolding. We'll see a fourth wave through here and a fifth wave through here, and then sort of a rally back up and then down further as well. So they are working themselves down, but the quick moves that we've had over the last week will tend to slow down now. So when you're looking at a chart like this, when you always get the opposite of what you're looking at. If you're looking at a correction, then you're going to get a trend next. If you're looking at a trend, well, then you're going to get a correction next. So you always get the opposite of what you're looking at, which is a little bit different from sort of buying things in life itself. What you're looking at and seeing is what you're buying, but it's not this case in the markets here. So okay, the Aussie market as well. It's just a line chart here, just trying to simplify the pollution in it. But once again, we're looking at this strong, nice impulse wave coming down through here on the 2-hour chart, and there's more to come down as well. However, we do have the 4,000 there, and the bottom line is it's going to get choppy around here. Sure, we can get into the guessing game of going to this one and this one, but all I can say to you is when you're trading this market is make sure that you're on the right, you understand the levels, the sub levels, and you're on the right side of them. And I think yesterday we were talking about trading to the 72 if you're on that way coming to the upside there. But it's the same again as well today. If the midpoint here, the 450, the 50 finds support, well, then you can go to that direction, but you don't go there until you got support there. And you know that when you come into group 1 here, 10, 20 and 30, you need if you're going to short it, you need the 20 as the resistance, because then you know that the price is pegged to the closest largest number. So it's basically supported here on top of group 1, and it's sitting in this range of the 50 here. It should sink lower into this, but based on that 3-wave correction there. But it don't worry about that. This is an impulse wave here down too as well. But look, if it finds support on there, then you need to be on that side of it and you trade to that level. Then if the 72 becomes support, then you can move up and step up through here and then move up and get out at the next level. Take the money off the table at the numbers, and don't think that, that if you're in a trend that's actually going to go forever, you need to, the more mechanical you can get, the more consistent you'll be with your bottom line. Coming on to some of the commodities. Gold hasn't really been doing much as well. You know that we're in a 4th wave here. You know that 4th waves are complicated. You know that may be the top of it there, and we could be moving down from that point into with that 4th wave finished at this point here. The 4th waves are complicated normally, so they can be triangles and double zigzags and all those sorts of big complicated corrections. So we don't know yet. This can certainly push up to this region up here to where the supply is in the 38.2 retracement level, I think, is in here somewhere. But the 4th wave of one lesser degree, this high here, is certainly a normal target point for that. So we could see this push up within group 1 here. And that's fine to do that. If it found support on top of group 1, then we're made an error somewhere and we'd be looking to go to the upside. So even though we play the guessing game of Elliott and all the rest of it, when it comes to trading, we want to be on support or resistance. That's the reality of it all. So it's nice to have the Elliott and the levels going together. On the short side here, to confirm the wave 4 is done and dusted, then we want to see it trapped on. Well, the 72 is always nice to have it retested, not to just break through it like that. The breakout is important, but the retest is more important, and locking under there as resistance is what you'd want to see here. So there's it's a bit of a guessing game at this stage here with this wave 4 correction. So I can't give you a clear direction on that at the moment. But if the 80 becomes the resistance, you could work it from there. The oil market, until it's under the 95 here, then it's supported, and that's that. Once it's locked under the 95 here, then we can kind of get into the routine that it's leaving. It's left this upper zone here, and we're under, so we can be short. It's difficult to be short on why it's got support here. It's that simple. It should follow stock, but it certainly wants to go up in its own little way. But we'll just chill out and wait for it to to lock under here. The copper market here for the US one here, we just had a look at the London one, and we could see that the London LME was moving down further. The warehouse, the stock in the warehouse seems a bit low, so that's probably why the price is being sort of supported here. But the 320 here, once that becomes, or if it becomes resistance, then we can consider the price to be part of the 300 here, and if it's part of the 300, then we've got a bearish picture here as well, because as I mentioned, this particular pattern through here could be corrective as well as impulsive here. So it's not clear, we can't use it, so we need that group 1 to find support. And this is important for the material sector, all of those. We're still seeing BHP in the US move to the downside through here. We've watched it have the fail retest at 80, drop under retest 78, the next level, then 75, and 72 is important to us. So it's under that. We know that the 65 is the next level here, and you can kind of see the wave structure really unfolding here in a way, in terms of down for one and back for two, then down for one and back for two. It's like a strong third wave down here, isn't it? So we've got a series of fours and fives to play out through here. So there should be more downside in Rio and BHP and so forth on a local market. You can see that Rio at $72 was just perfect for the short. Yeah. Okay, so that's that. The US dollar index, it's pushing higher as expected, but it will have problems at the 80 here. We can still see the structure here. It's got a little wave 4 correction to unfold here at the 79 here. So, you know, there could be more of it here, but the bottom line is that the trend is up. But there is resistance up here, but we should be going through that at some point. But yeah, the US markets will be closed for half a day tomorrow as well. So tonight. Yeah, so trend is up, but we could see a bit more of a correction here before we see a push up through there. The euro here. So from this last high we had up here, you can start to see a very clear 5 waves down now in terms of from this here down for 1, back for 2, down for 3, back for 4, and down for 5. Now, in this last little bit through here, it does appear that there's a little bit more to this just yet. So it could be down for 1 here, back for 2 here, down for 3 here, 5 waves in that structure there, and this is a wave 4, and then we'll be coming down for wave 5 here, taking out that low there. But once that's complete, we should see a bounce from that area there. I'll just have a look on a smaller chart here and just go over that a little bit. So, yep, so okay, so we've got down for 1 here from the 134. You can see the, you know, even when you can't work out the wave structure, sometimes you can see that the strength is in the middle here, so you can go, oh, that must be the third wave then, you know. So it's the same within here as well. So we've got that 5 waves to the third wave, and so that's down for 1 here, back for 2 here because it didn't take out the top. And then we kind of see this sort of structure down here. We may not be able to work it out. It may be 5 waves down here for wave 1 and back for wave 2. But the simple fact that it made 5 waves in here tells you that you'll get a rally and then you'll be going down again. You know, that's the good point of it. And the same with this one as well. That will be in 5. And then back here, and then this strong third wave down here. So you know that's the 4th, and you got little sort of 5th wave in here, a bit dodgy, but the 3rd's in here. Then you got this sort of ugly 4th wave here, the A, the B, and the C wave coming back up through here. So we should have a 5th wave lower down through here, but at the same time, you wouldn't really sort of short that, not why it's sitting on top of group 1 here, because that's the support, and we're back to that sorry, there's 133 here, then we've got 10, 20, and 30. So, you know, I'd be interested in shorting it if it locked under this guy here, then I know that, you know. Yeah, so, but anyway, it should come down. Confirmation will be under this one here. It's just you're basically shorting into support here. That's the problem, you know. So you've got to kind of make your mind up how much risk you're going to take. But you'd need, you know, if you're going to do that kind of stuff, well, then you might as well sort of sharpen your wits up and look at what you've got in the 4th wave here as such, because the 4th wave should pull back 38.2% of this 3rd wave here. So this is kind of where you would be sort of more interested in doing it and using the robo method on a 2-minute or 4-minute chart to catch the downside through here, because yeah, that's I mean, I haven't done it for a little while, but I like using the 2-minute robo normally on the Dow closing session or the Australian market if it's running, you know, but you need a good spread as well. But you can see that the robo method can keep you on the right side if you're trying to get from one level to the next level. The same down here as well. So short here, out here, long here, short here, and then you know that you basically know that you're working into to this particular price here. So then you need to see if you got it, if it doesn't become the support, then you know that you'd be looking to the downside on that. But you just trying to get down to the next level, trying to get your 7 or 9 points within all of that. Okay, well look, that's it really. The bottom line is that the US markets have got further to go down. But you know that we're looking at some sort of wave 4s and 5s coming into all of that. But yeah, so we're bearish but choppy. That's the bottom line. So keep trading ranges shorter and get to break even on your trades as quickly as possible. Then you've got the free trades and you don't have to sweat it out. Alrighty, good morning and good luck.